What up, Outliers? How's everybody? We just are rolling over from the pro live stream. I'm gonna keep splitting these up. This one will be a little more broad, open-ended, and stuff like that. And then for those that are in the pro live streams, we can figure out if we like the pro live stream before or after this one, and then we can dance around whatever makes sense. But there will be no stream tomorrow. And then on Thursday, when I'm in New York hanging out with the fam, I set up a live stream with Kevin and then PB. And that will be originally, I actually wasn't expecting it to be just a GameStop stream, but I think that's what those guys wanted to do. So we will keep it focused on GameStop, which is kind of convenient because I don't think I'll be able to do the GameStop stream on Saturday. So we'll be able to get the GameStop stream in with those guys. So I'm really looking forward to chatting with them. I've not worked with Kevin before, so I think it'll be really, really cool. He and I have chatted a bit on email and text, and he just seems like a good dude. So I'm excited to get in touch with him. So that is what's up for Thursday. So let's talk about what the fuck is going on in the world today. I'm going to ask Perplexity to just give me a summary of US and global news today. Summarize current US and global news. And also, fun fact, you guys should not see ads anymore. I figured out a way to turn it off on the live streams, which I'm very excited about. I feel like getting ads during a live stream is really disruptive. And again, like the amount of money that I make from the ads from a live stream is straight up nothing, like not worth anything. So it's like a lose-lose all around. While I'm getting the news for that though, here's the list of the focus topics. So let me know what focus topic speaks to you, and we can grab that. And then in the meantime, I'm going to see what's going on in the news. The first thing is the drone sightings. So in the US news, drone sightings, the FBI, along with other federal agencies, have received over 5,000 tips regarding drone sightings in Jersey and other northeastern states. They have concluded that these sightings do not pose national security or public risk, attributing to a mix of lawful, commercial, hobbyist, and law enforcement drones, as well as manned aircraft and misidentified stars. Okay. Trump's legal battles. This says former President Donald Trump has faced charges in 4 different cases with significant developments, including the dismissal of a classified document case by District Judge Eileen Cannon. Currently under appeal, Trump also faces charges relative to efforts to overturn the 2020 election results, which delays in trials due to legal maneuvers and appeals. In Wisconsin, there was a school shooting at the Abundant Life Christian School. This one, I think, was yesterday, if I'm not mistaken. I think this one went down yesterday. Was it yesterday or the day before? Yesterday. So it was yesterday at 0700. No, this is other stuff. Hold on. Yeah, it was yesterday. Where's the fucking news? There it is. Let's figure it out. Multiple injuries reported in Madison. 3 reported dead, including the shooter, multiple others. Harrowing incident took place at the Life Christian School. This remains active and ongoing. This is one of those interesting things where school shootings have become almost more and more popular, unfortunately. And I have to speculate that a reason for that is because they're so horrific and they get a lot of press. So like somebody that wants to do something and be talked about a lot, they kind of know that it's going to happen, right? We're talking about it now because it's a big deal, which is just a bummer because it creates like this self-fulfilling prophecy almost where somebody's like deciding where they're going to go do this kind of thing. 12 injured. I'm just seeing if there's any other details about it. Gunman burst in, open fire, saw at least 2 people dead, 3 injured, gunman dead of self-inflicted. Okay. Gunman dead of apparent self-inflicted gunshot, age of the gunman and victims not yet released. Yeah. So, bummer. So that's that. In global news, there was a explosion in an Iranian coal mine due to a gas leak. That's kind of interesting. I wonder if there's any pass through. That gas up a bit. And then futures right now have small caps up. They're leading a little bit over large caps, and tech is down. Gold has been on a bit of a tear. And it looks, yeah, so it's had like a massive 3-day run here that just completely reversed. Very, very interesting movement there. But it looks like little bleed through from this. Israel has conducted extensive bombing operations in Syria, targeting military installations, aiming to conclude these operations soon. Follows a resurgence of anti-regime rebel factions in Syria, leading to significant territorial gains and the flight of Bashar al-Assad to Russia. A video captured the assassination of Igor Kirillov, a high-ranking Russian general in Moscow. The explosion believed to be from a remotely triggered device. That's kind of crazy. God dang it. Let me see if I can find this somewhere else. Let's see. So as always, really good footage. Wow. That is not insignificant. That was a fair payload for sure. Very, very purposeful, clearly. UK is reevaluating its relationship with China under the Labour government, potentially easing economic relations. That's very interesting from just a geopolitical standpoint. You wouldn't necessarily expect to see this. So the fact that this is going down this way is really interesting. Prior to taking office, Artist was pitched comprehensive review, Britain ties, strategic dependencies on China. Yeah, very interesting. I'm going to pop the door for Thor real quick. Curious. Okay. Let me get caught up on these comments. Lauren says create an audit process. I love that one. That sounds great for the, and it's also very timely, I think. Where is that? Here. This will be for 17 Ds. And this will be Lauren. And then this will be on YouTube. YouTube. Sweet. Yeah, we'll definitely talk about this. I wonder if my little... Oops, wrong one. The wrong thing's going to open really quick, but I'm going to close it. YouTube let me know that now would be a good time to insert an ad. That's so funny. I literally turn off ads and it's still trying to get me to run ads. I do wonder if not having ads is going to negatively impact like the discoverability of the live streams. That wouldn't surprise me at all if they purposely make it harder to find. Let me see if my little notepad's working now. It is. All right. My notepad's working. This is great news. We can work with this. All right, so let's get back over to this. Mock Chicken says there's no possible way the U.S. would allow this level of violation in its airspace this long. Most plausible explanation I've seen so far is lost nuclear materials. They can't say anything. I don't think that's really that plausible. We actually talked a lot about that yesterday. Because, yeah, a bunch of different reasons. The live stream yesterday at least goes into my opinion. So let me redact that. Plausible, yes. Probable or likely, I would argue not. And beyond that, more importantly, I think one of the things that we're going to be seeing here is more people looking and more people getting involved, which it can add complexity because we had an initial instance with a certain number of drones doing whatever they were doing. And then now there's probably more drones out there by hobbyists, police, other entities that are trying to get involved, which makes it looks like there's even more activity. I think that just becomes a little confusing to like truly isolate what the event itself is. But yeah, I mean, it could be. It definitely could be that. I've seen that theory. We spent a while talking about it yesterday, and I shared the reasons why I think that's quite improbable in my opinion, but I have no idea. So absolutely could be. Big B says the interesting thing was the shooter was a female. I heard that. I didn't see that in that article. It actually called it a gunman, like gunman. But I do wonder because I saw that. So that was my understanding. But I was just surprised to not see that in the article. But maybe they were just reserving what they're going to put out until they have like specific information or confirmed information. Dark Mark says they had a bomb in a scooter. That was for the Russian thing. Yeah, which is crazy. Reginald Rock. Sick name, by the way. How do you feel about FOMC? I believe we get a 25 cut. However, I hold GME and curious how that might be. I don't think GME is necessarily going to experience much from that one way or the other. But the market from an overwhelming pricing perspective right now definitely is looking at a 25 bips cut, which I think unless there's some sort of, I'm grabbing the watch tool, unless there's some sort of commentary around it that causes like a lot of concern, I think this is pretty much priced in effectively at this point, at least in my opinion. It seems to be, seems to be the case. Let me grab a post. I want to see if I can find it because I think I found it yesterday. There was a post that I found in Theta Gang. No. This one. Found it. I want to talk about this. This one here. I think this is a fun one. So Jolly Jury. And then as always, if you know any of these people on Reddit or if you interact with them, please let them know that like we talked about this, because I don't try to use them for examples just to use them in example. Part of me is always hoping that the information might find its way back to them so that it could be useful to them, at least hopefully. That's the idea. But they say I sold some Tesla calls in November when it began to break out because I figured it would cool down. Boy, was I wrong. I have calls at various expiration dates, Jan to December 25, and a range in strike price from 400 to 500. I expect them all to go in the money soon. I'm wondering if it's better to roll them out closer to expiry in hopes that the price comes back down, or to do it sooner so they don't go deeper in the money. I have sub 100 call spaces and do not want them called away. I was hoping to just keep rolling for a credit until it comes back down to earth so I can let them expire worthless. What pitfalls am I overlooking? What do you guys think? Lots of things here. Lots of things to talk about. Let me grab our handy dandy writing pad. So let's start with this. Actually, I'll highlight them so we can talk about them in order. There's number one. Here's number two. Number 3. Number 4. Number 5. Number 6. Lots of things. So let's start with number 1. Tommy says lots of extrinsic value left in the short calls. They are not yet in the money. So there's the first thing that I definitely think is worth discussing, is that they're not even challenged yet. It's not even, we haven't even started the dance and we're already getting antsy, which is a problem. So Dr. Zayas says 1, too much time. This is good. So Dr. Zayas, talk to me about number 1, too much time. Why is that a problem? Why do I care about that? Why do I highlight specifically the DEES-25 expiration here? There are a few reasons that you should be aware of from a rolling options perspective. It really comes down to 2 things, I think, summarize at the more important elements of it. So Dr. Zayas, extrapolate more on number 1, because there's 2 specific things that I believe apply here that we probably need to consider. There you go. So that's the first one. Dr. Zayas says theta isn't helping you when there's over 90 DTE. Now, let's take a look at what those might look like. Let's go to the DEES-25 and let's just pick something between the 450 and the 500. Close this. Come back over here. Let's go to Tesla. And let's go out here to the DEES. Now, I do wonder if maybe he means this expiration now that I'm looking at it. From Jan to DEES-25. Nope, definitely not. Trying to give him the benefit of the doubt. But no, definitely not. And let's take a look at the 500s. We'll give 450 to 500 somewhere in here. So on a daily basis, these are pulling in $19. The 450s are given $18. If we take a look at the 90s and we take a look at the 500s, these are giving $41 a day. We come into the 30s, the 500, these are giving $73 a day. So one of the issues that this person is running into is they literally sold them in a highly disadvantageous point. Highly disadvantageous point. Going out that far to December, you collect a greater total sum of theta, but the amount that you get per day is very low on a relative basis. Again, you saw that it was like less than 20 cents, whereas the things that are 30 days out were up to 70 cents, like almost triple almost quadruple actually, what you would get for being that far out. The second thing is the strike prices that they picked probably weren't very logical based on the amount of time that was remaining. Because if they sold those calls in November and you're going all the way out to DEES-25, and let's just grant them that they went to the 500s, even in November, those weren't that far out of the money. Like it literally doesn't even make sense. So let's take a look at that element of this discussion point. Let's go back to November. We'll give him the benefit of the doubt. We'll say that it was like 15 November, not even, well, he said like when it was starting to go parabolic. So yeah, maybe in here, maybe 18 November. And let's go out to these DEES-25s and let's take a look again, give them the benefit of the doubt. Say that we went further out of the money. We ran the 500s. Let's see what this shows. My guess is this is going to be like a 42 delta, even worse. These are not far out of the money at all. So they put on a trade at the 500. Again, giving them the benefit of the doubt. If this is where they went to 450, that's fucking psychotic. Like that's a next level mistake. So I'm granting. that on the further out they went, they picked a further out of the money option. And on this trade, they're making literally $12 a day in theta. And the option itself is a 42 delta. This option is a 48. Hold on, let me see. I lost it. Hold on. A 48.6% chance of a touch and a 20.5% chance of being challenged. And you might be saying, well, I thought delta is 1 times. Remember, the further out you go, the less accurate delta becomes. But this still easily has a 50% chance of being touched. Like the exact scenario that's happening that they're uncomfortable with, there's at least a 50% chance of that happening. So there's just an entire dissonance here on the premise of the trade entry. It literally doesn't make sense. So let me take a pause on those first two and see can you tell what's going on here? There's a specific thing that they're doing that we talk a lot about here that I believe most of you will be familiar with. And I think you'll be able to pinpoint it based on just these first few decisions that they're making. I can tell that they're looking at the trade in a specific way. And that way is a way that I tell you all to literally never look at trades, but I can see that they're doing it. It's Goldilocks analysis. It's exactly what's happening here. They saw the credit that they might take in by going out to December 25 to the 500s. And they were like, oh, this is great. December, super far out in time. I'm going to be able to collect a big net credit up front. This is great. The problem is they're too worried about the cool part of collecting the credit that even as they're putting on a trade that structurally has a 50% chance of the exact thing happening, they're then surprised and uncomfortable. And what Tommy is highlighting is exactly correct. It was straight Goldilocks analysis. They were only looking at the trade from the perspective of what they want to see happen. They were not looking at this trade from the perspective of what could happen. What am I comfortable with if it happens? None of that happened here. I literally can tell from the way that they're talking about it and what they've selected so far. So the next thing, this is actually a good question, is if it's better to roll them out closer to expiration or to do it sooner so they don't go deeper in the money. Let's just pretend that they're in the money. The 450s definitely found their way in. So what's the trade-off here? Well, what are you going to do with the Decembers? Where the fuck are you going to roll those? You're already through the overwhelming majority of the options chain. So if we come out of on demand and we take a look at DEES, you literally can go out to Jan 26, June, DEES, Jan. Like those are your choices. That's all you got. So you already ran through your expiration liquidity based on your first entry price. Massive mistake. In doing so, you also are collecting way less theta per day for the same thing. Also, not a great pick. So for those December 25s, there ain't shit to do. There is not shit to do, because then you're playing the game of what's Tesla going to be worth in 400 days or 500 days or 700 days. You might not see much of that at all. And you will have been tied up in such a long duration trade that you're kind of stuck. You're legit kind of stuck, because the way that you eventually unwind covered calls, even if things don't go well, even if you're, rolling short calls, collecting a credit, trying to extend the duration of the trade, which this would be super extended. But as you're trying to do that process, you run out of the ability to roll, and then you just have to wait. You have to wait. And one of the ways you get out of the trade for a max profit, instead of eating all of those losses, which you absolutely are on the docket for, is there's one of two scenarios that let you exit the trade in that case to recoup all of those net credits that you rolled for. What are the two scenarios? There's only two that you can viably run with. Only two. And by going that far out, you're making them both real hard simultaneously, making the entire situation much more difficult. Bigabee says, can he buy it back? He could, but that would not help him at all. That's actually where he would realize the loss. So that's the least viable approach to try and salvage what he's made from the rolls. It's the least viable approach. Any other guesses? There's a couple other scenarios. There's really only a few ways an option can be ultimately settled. So we just found out that that one's not the one we're looking for. Buy shares, that's not it. In the process of buying shares, think of that scenario. If we buy shares up here now at 500 or whatever, all we're doing is adding more risk and it's not helping us at all. Let's take a look at a scenario. I think it will become more clear. Let me clear those off. Cover? Nope, that's not it either. So if we sell to open, one option for $1. Buy calls, that's not it either. I'm surprised. The two scenarios, well, let's just take a look. You'll see. If I sell to open an option for $1 and then I buy to close it for $2. So this equals these two. This equals a minus $100 realized loss. And then let's say I sold to open another one for $250. How do I realize the profit? How do I get this $250 in order to overcome this loss? There's two scenarios. The first one is, there's three scenarios technically, but as you go deeper into this, there's really only two. And I'll explain why there's only two. First one, expiry. Second one, buy to close. Buy to close at better or technically less than break even. Third one, assignment. Those are the only three choices. That's all you got. That's the only way that this will work. But there's a nefarious element to this because I'm giving it very generous pricing. But let's move this out in time. Let's just continue the example. Let's say then I close this for $3. So now I just realized another $50 loss. Oops. Another $50 loss. So my total loss now is minus $150. Now let's show the reality of how this works. Let's say I roll again, sold to open one, and now I can only get $3.05 because it's so far in the money. And then when I go to, so this part matters a lot because as this net credit here gets smaller and smaller, you have to hold longer and longer in order to get to this point, if you're lucky, to get to your break-even point if the net credit gets smaller. And by being this far out in time, guess what? You have a whole lot of waiting to do. About all you're going to be doing. About your only choice that you have available to you is to wait. Because in order to get this down, and we need to collect this, essentially, we need to collect 300 of this $305. So the overwhelming majority of this would have to decay away in order for us to find ourselves into this scenario where we can buy to close at break even. Now, in the case of assignment, you're going to let your shares go. The scenario this person doesn't want. And when you allow assignment, you sell your shares at the strike price and then you keep the whole premium. So this checks that box. Or if you get a big enough accommodation, then they might expire worthless. But guess what happens in that accommodation? You're making less money on the trade, because if you're accommodated on the short calls, it means price has gone down. It means your long shares, which are the basis for the trade, which are the primary profit mechanism, they're now worth less money than they were previously. So this isn't super ideal. So this is why most of what this person did to set this trade up really just doesn't make sense. It just really doesn't make sense. Tommy says, sell more to collect more premium. You're already so far out in time. I think that would be a terrible choice here. The only thing this person can do is wait. And if they get a chance to take those super far out calls down, you got to do it right away. Take whatever the, flat money is that you would have gotten on the trade. Be thankful for it. And GTFO. Chris says break even would be 155. No. Let me see. So we lost 150 there. Yeah, exactly. It would be 155. Yep, that's exactly correct. And the point I'm making is that as this continues to move, you notice how far the break even takes as a percentage of what you've made. So because this, I'm giving the trade a 50-cent credit, and then, a 50-cent credit here, then another 50-cent credit here, which is super unlikely. The way that this actually would work, more likely than not, is that you'd, especially being that far out in time, you'd be getting tiny little net credits, and there's nowhere for you to go. You're already too far out in time. So you essentially have to collect the majority of the credit that you received in order to be able to get out unscathed, especially the longer it goes. Reginald says, with buying to close, you can continue to hold and recoup profit over a longer period. That's a really, it's plausible, but that's a really bad approach. The reason why it's a bad approach is this. Let's say we execute that plan. Let me clear this stuff off. And let's say that we, at the end of 15 rolls, we've rolled 15 times, and the net credit that's on the trade, or the total premium that's on the trade at this point, is $25. And let's say our break-even point is $2. And let's say we're like, spot price is $20. And we're like, well, we're making a few $100 because we got a $5 price accommodation on this. I'm thankful for that. So let me just get out of this. And that's when you exit with this at 20. So the problem here is then if we follow that course of action that Reginald is exploring with us, and we buy to close at 20, that means that we're really realizing an $18 loss, difference between these. And this is realized. Per contract. You've just realized that loss. Now you have an unrealized gain. Guess what happened to that? What can happen to that unrealized gain? It can go down. So you could have this scenario where you're realizing a loss here so that you uncap the profit potential of the thing that you're fighting. And then as you do that, or sometime after you do that, it can go down. So then, not saying that this is going to go down to sub 100, whatever their cost basis is. The point, though, is that we're realizing a loss without any sort of realized gain that can also turn into a loss. So that's why it's bad form, because we don't know. We have no idea what's going on. Reginald says, yes, realizing a loss, no doubt, but keeping unrealized from shares bought and more importantly, getting rid of the emotional aspect of it. If he wasn't willing to sell at 500, then it was always bad. Yeah, but I definitely wouldn't make the trading decision to get rid of the emotional aspect of it. That's just feeding into the emotional element of the trade. I think you have to lie in the bed that you've made. It's not a bad scenario. Like, that's the reality, is that the trade is at max profit. So whatever happens to be above that handle, above the 500 handle, cool, sell it, let it go. And to what Tommy is saying before is something that I will frequently do, especially if I'm selling short calls below my basis, but you have to track your allocation and utilization so carefully, is buy more shares as it approaches my short strike. But the only time that can be done is if I had existing spare allocation that wasn't utilized. If I'm utilized, I cannot add more in that scenario. You're utilized. The risk is out that you defined at the onset of the trade. There is no choice for you otherwise. You have to accept that risk. So really fun. I remember reading that and I was thinking, man, like, there's just so much in this that stuck out to me as a really great learning point. And let's run through the rest of them really quick. I was hoping to keep rolling them for a credit until it comes back down to earth. What pitfalls am I overlooking? Well, the pitfall that we're overlooking here is that every single time that you're rolling these options, even if it's for a net credit, you are realizing a loss, provided that they're in the money and continuing to fall further in the money. In that scenario, you are eating a loss that will continue to compound. So you have to be aware of that. The other thing is, do not want them to be called away. Don't sell the fucking calls. If that's your stance, don't sell the calls. Or do what I talk about all the time. Sell the calls at a ratio so that you can collect some money on what you're holding, but you're not putting yourself so far out that if you have to let some of them go, that this isn't catastrophic anymore. Like, this is easy, basic 101 planning shit that this person completely failed at. All right, let me figure out what our dinner plan is, because Mel's hitting me up. My eye feels kind of itchy. And then we'll get over to the focus topic, because I want to spend a little bit of time going through that. Let's see what she picks. Okay. So that's ultimately what causes them from being unable to keep rolling into perpetuity. I want to be so clear. Into perpetuity is different than being able to roll for really long times, or what's probable, right? The reason why we can't roll into perpetuity is because we are slowly eroding the net liquidating value of the account. Net liquidating value is going down and down and down. Now, typically it's not by much, and typically things do accommodate at some point that you can get out of it, but it's just not in a perpetuity. Okay, we got our dinner plan set. Let me send this over to the lady. If you guys were going to eat French fries, what kind of French fries would you go for? Do you like regular fries? Do you like curly fries? What kind of French fries are the move? Sweet potato, nobody likes sweet potato fries. That is, I literally think that's just a bold-faced lie. I don't think there's one person on planet Earth that actually likes sweet potato fries. I feel like if you're gonna do if you're going to do French fries and you know that you're eating crap, that you just eat the crap. But nobody's like, yo, let me get some. I just don't see that. I think that's crazy. I think that's psychotic, literally psychotic. I just feel uncomfortable with that as an idea. Makes me nervous. I get sweet potato any chance I can. That just feels like serial murderer activity to me. I have to be honest. Doesn't sound right. That feels like wrong. Reggie knows where it is at. What'd Reggie go for? Sweet potatoes? No, they don't. There's no way. Yeah, I don't really like French fries that much. French fries are typically really annoying. I just saw them on the list here, which made me think of it. But yeah, French fries typically, if they're French fries though, I think curly fries. I think curly fries is the right move if you're doing French fries. Otherwise, don't do them. No, we don't want this. Sure, this is fine. All right, I think I'm all set. Only psychopaths don't like French fries. It's like people who don't like pizza. Well, it's like liking them is one thing. I agree with you. I have absolutely no problem with French fries. I just also know that French fries are literally straight garbage. There's nothing in them that's good for you. So I view them from like a fueling perspective. But yeah, I agree with you. Like if somebody didn't like French fries at all, I would be a little sus of that. What the fuck is going on with my order here? I hate it when this thing does this. I think it has like 2 orders. I need to see where she landed. This one. Okay. Give me 1 sec to redo my order really fast. And then we're going to get into building an audit process. I'm actually really excited to talk about that. The reason why I am really excited about that is because I think right now, this is what literally everybody should be doing as we get into end of year timing. So I think that the timing for building an audit process, AAR process, as I would call it, is right on fleek. I'm actually pretty stoked. Yeah. Mel said that the thing is being weird, and she's right. It's being super weird. Whatever. She'll figure it out. I have confidence. Take sweet taters and put them in beef stew? What? Yo, y'all are starting to stress me out a little bit. What the fuck is that? In stew? Why would you put it in stew? This is going to be super soggy. I don't know about that, man. That sounds... Yo, y'all are starting to stress me out a little bit. These choices. Yeah, exactly. Tommy's on it. Like, this might be like fucking sweet potato people or some shit. And again, nobody's a sweet potato person. I don't think... I don't know, man. Y'all have me fucked up right now. I'm tripping out. All right, let's get rid of this. Let's talk about building an audit process. Now, one of the things that we do here when we do these focus topics is hopefully you guys can see that we genuinely are doing it live. Like, I'm walking through how I would think about solving for the problem set. A lot of the things that are in here, I have various reference videos, but the reason why I like doing it this way is my goal is to show you how to think through the process for yourselves. And then eventually the idea is to lift and shift some of these processes that I do so that you can apply the same mental model to other things that you do. So let's start with an audit. And you guys already know what the first thing is. This is the same template. This is the same framework that you're going to see me do for everything that we do. So the very first thing typically can alternate between one of two tasks, but the very first thing is an orientation. And for those that don't know, the reason why I apply this kind of framework is because this is what we do in the military. In the Marine Corps, we have a process called orders process. And I can literally show you really quick what one of these looks like, because I really do think it's a great way to think about what we're doing, the world around us. Like I genuinely believe it's a good add-on. So let me find one of them for you. What's this thing? I'm just seeing if there's anything in here that shouldn't be out. Yeah, probably not. I don't think this one should be out. This one actually has like stuff in it. I'm looking for like a fucking base order that's really basic. No. I mean, I can Google it really quick, but I was hoping to give you something that's a little more practical, if I can find it. But it needs to be cleared out. Yeah, okay. I don't see anything here that Okay. I'm just going to look up like a basic. Oh, cool. So this is on, damn. So this is from Training Command. So this one is directly from the Marine Corps, but perfect. This is great. Cool. So this is, you literally can get this off of Training Command, which is cool. So this can be whatever, meaning this is completely public. And the cool part about it is that this is actually the training process. I don't know why it's from FMTB. I guess it's because they teach the corpsmen about the 5-paragraph order process, and this is probably why it's from them. So this is cool. So the way that this works, for those that don't know, from like a military learning perspective, we're not going to spend a lot of time on this. I think it provides a great framework, though, genuinely, on how to learn things. Is we have things called TLOs and ELOs, terminal learning objectives, enabling learning objectives. It's exactly what it sounds like. TLO is what you should be able to do once you finish doing something. ELOs are the building blocks that help you implement the TLO, whatever the ultimate end state is, which is absolutely beautiful. So let's take a look. In a standard combat order, there's a process that we conduct before we do anything that serves as a general analysis of things. It comprises of the 6 troop leading steps. The first one here is begin planning. And that's actually what we're going to be doing right now. We're going to begin planning. This is military stuff. You don't have to worry about all this. The main thing I want us to take a look at is the actual 5-paragraph order. Warning orders, frag orders, those are different things that you guys don't have to care about. So this is what I care about here, the actual 5-paragraph order. So the way that the 5-paragraph order is typically set up is we call it OSMIAC, orientation, situation, mission, execution, admin, logistics, command and signal. So whenever we're going through this process, the first thing that we're doing over here is we're literally getting an understanding of the orientation of the landscape. We're understanding the situation that would be the next piece after it. So the reason why I'm showing you this is this isn't stuff that's like unique to the way that I think. These are things that we literally use in the military, modified, obviously, right? Like I don't have to do a T-SWALI evaluation of the market. So it's different, but you can apply a ton of the things that we do from the military into this because it provides fantastic structure. So the first thing we have to do with an audit, which again, for me, I would consider this an AAR process, after action review. The reason why we're doing this is markets are complex. We are complex. How are we doing? So, orientation, the reason why we're going to be doing an audit process, why auditing matters, is because the system that we're interfacing with, and we as people, are very complex with a lot of variables. It is not something that you can just know off the cuff. It's not something you can have on the back of your hand. It is a very complex system with a lot of variables. Multivariate is what we would call it. And you can't discreetly track all of them successfully. There's literally just too much. So the purpose of the audit is to conduct a review of what we're doing and how we're doing. That's the entire purpose. So now let's talk about, I normally skip a bunch of steps from the orders process, by the way, again, just because there's a lot of excess stuff. So after we have the orientation, I normally go to mission, which the normal version of this would just be like the purpose or the goal. Like, why are we doing this? And this is essentially the TLO element. It's at the end of this, what's the output? Why did we do this? What are we able to do now? And it looks like our dinner order just got canceled. That's annoying. 1 second. Yeah, that's super annoying. Bastards. We'll be all right. So think through while I'm doing this, what the output should be. Like, why are we doing this? At the end of this, what are we able to do? What are we able to understand? There's a couple key things, specifically, how can we integrate this into our broader process? That's ultimately what matters to us here. So the way that this works is this. This is our mission statement, which is pretty damn simple. The mission statement is we need to understand the strengths and weaknesses of our approach. And the reason why we need to understand the strengths and weaknesses so that we can refine our process. That's the entire basis for this. So this is what I typically refer to as begin with the end in mind. The reason why this matters is as we go through the next step of execution, it all should serve this purpose. If it doesn't, might not make sense to do. It might not have a place in this process. So let's pivot over to that next. This is the actual AAR process. What I like to do is an overall evaluation and then a segmented eval. Mel is hitting me up. My alternate, Jesus, why is this such a painful process tonight for us? We're struggling, gang. I think we finally have it. Mel doesn't want the other alternative. Now I have to find another alternative. Y'all know how it goes, but I think she let me know that she's good now. Okay. Tommy says, call a personal chef in. They are pretty good. They're a little bit slow. So you kind of have to coordinate them a little while in advance. But yeah, I mean, having a chef is, I'm not gonna lie, it's kind of cool. I definitely don't dislike it, I've learned. All right. Overall evaluation segment eval. Overall evaluation is portfolio level. Segmented eval, strategy. So what we're doing here is we're breaking out what we have to analyze into a couple different steps, and we're bracketing what we need to do. The portfolio level, this is literally where we review portfolio performance against trading plan portfolio metrics. So when we go through this AAR at this step, you literally should already have an idea of what stuff matters to you, what you're looking at, and what you're tracking. That's the point. So portfolio level metrics are things like max drawdown, average number of trades, total risk out, all of those kinds of high level metrics that are cross category, cross portfolio level all go here. Now for the strategy, this is literally where we review trade logs and compare against trading plan. And we iterate. So the way to think about this, all these words, is this is what we should do on a weekly, on a monthly, and an annual basis. Now, one of the things that you should leverage is the feedback of other people. And you can make yourself a pretty basic template that can track overall portfolio performance and then individual strategy performance. And this way you can track it over different periods of time. You have to build the structure for that. So for example, if I hide this and we look at this, this is, I don't know the last time I updated this, but this is an example of that. So I can go through this individual strategy or this group of strategies, and I can see exactly how they performed for the week or the month. And obviously something like a coverage triangle will be less iterations. Something like zero DTEs will give you more feedback on a weekly basis, or earnings plays will give you more feedback on a shorter term basis. And we can see how they perform. So your trade log is super important because that's what provides you strategy level feedback. And then what I do is I aggregate the strategy levels together. And then that's part of like the portfolio level component of the trading plan. And I'm sorry, of the trading log. So as I've showed you guys before, the way this typically works is I would have like a strategy here, strategy here, strategy here, strategy here. And then what I do is I have a summary tab. I call it C2C, command and control. And in C2C, I bubble all of this up into aggregate metrics. And then I layer on portfolio metric. And this is where I track these things. You can track things for your portfolio level metrics like max drawdown. I don't know why I did a B there. That's not correct. Utilization. Allocation. Number of trades. Average turnover. Volatility. So on and so forth. It's whatever, if you remember, for the mission element, it's whatever leads into that. Lauren says, holy cow, this is overwhelming. Yeah. I mean, if you think about at work, at whatever a standard job is, and think about what an evaluation looks like at a job, or think about what an evaluation looks like in school, which is typically an exam with different style questions. It's the same thing here. It's literally the same thing here. But the tricky part is you have to build it for yourself. So this goes pretty far into detail on how to evaluate at the portfolio level and then how to evaluate at the strategy level. Now, another thing that you guys 100% should do is leverage one another. We have a freshly cleaned out Discord where I think so far we've been pretty good without people getting scam messages. And that's beautiful. Big props. Glad that that looks like it's going to be the case so far, at least. And you can work with one another to say like, hey, I'm reviewing my portfolio. This is what I found. Any feedback, any general ideas. But you have to have documentation. And most people don't like to do the documentation because it requires work. All of this requires work. The beautiful part is once it's set up, it's fucking easy. Once you have your strategy logs in Google Sheets or in Excel, you just input data. You don't have to reinvent the wheel. What we're looking at now is the hard part. It's building the infrastructure. Once it's built, it's super easy to maintain. Literally, super easy to maintain. So I think, like, while this looks like a lot, because it's an iterative process that doesn't all have to get done at once. You don't have to know all the individual portfolio metrics that you want to track at a given point in time. But if you know a few of them, and then you're like, oh, this portfolio level metric might be interesting to track, and then you add another one, and so on and so forth. Most of this stuff you can get straight from a standard brokerage statement. Obviously, it'll be lower fidelity, but it's a decent starting point. So, yeah, this is the inside look, because if we go back to the purpose of this whole thing, we need to be able to make informed decisions. So how do we make informed decisions? How can we look at what we're doing, what we've done, and say, yes, this works in this condition. This doesn't work in this condition. This works in this other condition, or whatever the evaluation is that you're coming up with. You can't do that without information to base the decisions off of. It's just not going to happen. So this is how you arm yourself with information. That's the process. So Tommy says, took me days of redoing my log. Now super quick to update opening and closing trades. And that's exactly correct. That's exactly how it will work literally for everybody. All of the time and effort will go into the infrastructure. And what I try to remind people, even when we do stuff like, let me get rid of all this. Even when we do stuff like this, and we started building this super simple signal test log, or, you know, that we were talking about not too long ago. What I try to remind you all is that if you set these up in a way that's data friendly, you are doing yourself a massive favor. What most people do when they're setting up a trading log is they literally create their own nightmare. And the reason why we create our own nightmare is because a standard let's just literally Google it. I'm just curious what will come up. Let's see what comes up. Let's do like options trading log template. There's one from Etsy. This one is a Google Doc link. Oh, get rid of that. Let's get rid of this. No, that one's actually good. That one's good too. Those are good. Actually, I like those. Let's see what this one is. This one's good too. I like these. So I don't know this person or this thing from a hole in the wall, but like this actually looks okay. The reason why it looks okay is because this isn't like an excessive amount of information. I think that this is missing really important information, but this, I thought if I zoomed in, I'd be able to see more. Here we go. Let's see. So they have symbol, date, expiration, call or put, bought or sold. Like, I don't like that. That's excessive. Like, you don't need this. This is an extra series of words that doesn't have to be put in. You can do this via a formula based on the premium. If you're paying for something, you can use a negative sign to show the money's going out. And then if you're getting money, you can use a positive sign to show the money's coming in. So then you can deduce your way into what you have. So this doesn't need to be there. Stock price is fine. Days to expiration, this can be calculated. So I assume that's what this is indicating with the green. Current stock price, same thing. Break-even price may or may not matter. Break-even price might be relevant to your trade. It might not be. The reason why it might not be relevant is because if you're basing your management on something other than break-even, this doesn't really make sense. Wheel Stretcho says minus and plus would mess with formulas. What do you mean? With what? You just make the formula around that. It's literally no different than if you have B or S here. I have no idea. Columns? What are you talking about? I literally do it all the time. How does plus and minus mess with anything? I closed this. We got into this for 513. I closed this for 4. I'm out. Done. Yeah, it's literally not an issue at all. Even if we do something like a signal test here, and we have entry price on the stock here, we have our exit price on the stock here. One of the columns we would need is like P&L, or we could do like dollar change. So this minus this. Like that can be positive or negative, and it would be completely fine. If I wanted to create a table here and sort by it or whatever. Yeah, there's absolutely no issue whatsoever in inputting positive or negative signs. You just have to pay attention to what you're doing. So one of the things that people will mess up is like, if I have a positive number here, a negative number here, and then I do, in my mind, I'm like, oh, I need to do like this minus this. Well, that's not the right answer, right? You have to pay attention to the signs that you're using, but that essentially just means you have to pay attention to what you're doing, which is pretty fucking simple. Yeah, no, don't worry about signs literally at all. Signs are just, you have to pay attention to what you're doing for the rest of the formulas. Strike price is good. Premium is good. C, don't know what that is. Contracts, normally we would refer to that as lots. So contracts is good. Cost something, I think. I can't really tell. I can't really tell what that is. Cost basis on the shares is okay. Can't read that one. So this to me is missing some important details like delta. Delta would be really important based on what it looks like this person's doing. Same thing with like volatility. That would be important. And this is why I use a process for doing this. This is exactly why I have multiple sheets for different things, because I can't get all of the information that I need on one individual tab. I can't get everything that's relevant to an individual strategy in one tab. Unless, well, you could, but it would be really, really long or really, really wide, meaning you'd have to scroll all over the place. So I think that really isn't a great idea, because again, you make your own nightmare. So what I do is have individual tabs that I can then aggregate up. Notice how there's all this information. And I'm not saying that this is right or wrong. You do whatever's right for you. But here's what I can tell you that is wrong. This is another great example of like just a very basic tracker that does, I think, what is this, earnings? Yeah, this looks like an earnings tracker. Got tons of negative signs all over in there, and we Gucci. What's really not good are word templates. They're terrible. Word templates are terrible because you can't conduct data analysis on it. You can't aggregate things up. So one of the things that you have to keep in mind whenever you're building your trading log, one is what is relevant to the strategy. Great example. Notice for this strategy that's looking at earnings, I'm counting something like the frequency that realized volatility exceeded implied volatility. Notice if I go to my covered strangle tab, none of that's in here because it doesn't fucking matter. So you have to build it to be whatever you need it to be, but it's relevant to the strategy. The next thing is if you set it up appropriately, you can conduct data analysis on all of it. So if I do something like average RV versus HV count. I can then do average of this. Let's say that I wanted to figure out if there's a relationship between losing trades and an excessive realized volatility count. What I can, the realized volatility exceeding implied volatility, I can do something like this. RV to IV for wins, RV to IV for losses. And then this would be something like average ifs. And it'll walk you through exactly what you want it to average. So I want to average, in this case, the RV, the count of realized volatility relative to implied volatility. And I want to do that if the P&L for the trade is greater than 0. I can do the same exact thing for losing trades, right? So what I'm showing you is that if you build your log thoughtfully, you can then build data around it so that you can actually make informed decisions. What doesn't work is today I felt sad and my dog ran away from me because I'm undisciplined and didn't train my dog. I sucked. I also bought far out of the money, low delta calls that expired today and they did badly. I am more sad now. Like, this is literally fucking useless. You can do nothing with this. You can't parse or glean any broad level information from this whatsoever. It's literally useless. So when you're building your log, build your log so that it's relative to the strategy. Build your log so that you can conduct summary statistics. Then aggregate the individual tabs of your log. Then on a weekly and monthly basis, look over the summary statistics for your log. Compare that against what you see in your trading plan. Make sure that it makes sense. Make sure it's moving as you thought it would. Write down the ideas that you have that you might want to test. Iterate on the process. Show it to somebody. Say, hey, this is what happened this month. Anything stick out to you here? And this is what we do on the paper trading challenge. This is exactly what we're doing for this group, for the pro members, is notice how I have a C2C tab that I can aggregate the participant information based on what they're doing. And I can say like, okay, this person here has a pretty low win rate based on what they have on right now today. That's interesting. Maybe something's going on here. Or I can see, what's another good example? This person is up ever so slightly. I can see that they have a lower trade count. I can see that they're about even split on win rate and loss rate, even though this doesn't look right. This is looking at only... well, that looks weird. Anyways, I can then compare this, for example. And let's just say that this is a 50-50 split, which this would be closer to 50-50. If this is a 50-50 split and I have an average winning trade of 142 and an average losing trade of 188 on something that's a 50-50 split is a problem. So you can get and pull all that information from summary level statistics is why we care. So that is my TED Talk on audits and AAR process. I'm gonna hop off. Tomorrow I am flying to New York, but I'll be on the plane for the day and I'll grab the internet. So I'll be able to hang out with you guys in the Discord, keep up with what's going on. I'll actually be in the Discord even more than I typically am because I'm just gonna be sitting on a plane. If you all need anything, hit your boy up, be an outlier. I'll see y'all later.